decoupling from Bitcoin.
Yeah.
Which is equity flow versus crypto flow, which adds to this, there's something else going on. And then, looking, because I've got an asset management firm that invests in crypto hedge funds.
Because liquidity cycles change so quickly and often, the global financial system is going through big changes. As central banks pump money into the economy to control debt and boost GDP, wealth gaps in cryptocurrencies are growing. Cryptocurrencies like Bitcoin, Ethereum, and others are about to change how people spend their money and how they think about wealth. Just recently did an interview in his study of how liquidity cycles affect the cryptocurrency market. Raoul Pal points out that even though the economy is uncertain, liquidity injections are needed to keep growth going and keep debt under control. As digital assets become more popular, the predictability of these cycles may have a big effect on the prices of cryptocurrencies. Changes in liquidity could have a big effect on Bitcoin and other cryptocurrencies. This could cause price changes and new investment possibilities and risks. Buddy puts his money into high-end NFTs and thinks about cryptocurrency in terms of how well it performs. He knows how valuable Bitcoin is. He says that Solana and Sui may have better chances for short-term growth, which could change Bitcoin's price and direction. He thinks that digital assets are now important for wealth strategies that will decide the way of the cryptocurrency market.
Today, I mean, everyone's just so frustrated with this sloppy price action.
Yeah.
Right, equities at all-time highs, the macro's good, China's stimulating, everything is in place. The pattern matching versus exactly what happened last year, everything's in place, and the market cannot get out of its own way.
So what gives?
I don't know, and I was, talking to somebody today who we won't talk about naming, but the same questions like, what is going on? Is somebody selling? Is there a flow that we don't know about? Decoupling from Bitcoin.
Yeah.
Which is equity flow versus crypto flow, which adds to this, there's something else going on. And then, looking, because I've got an asset management firm that invests in crypto hedge funds, and speaking to everybody, there are no flows because everyone's waiting for the range to break. So there's all the family offices like, well, we just want to wait for things to start being confirmed. And it's the election, we want to see what happens with the election. It's basically everybody's waiting for everybody else. And we don't really have a catalyst. I mean, all the catalysts are in place. I don't know what's left. 2 weeks ago, and it's probably 50 charts of liquidity, financial conditions, historical pattern matching, technical analysis, everything from, if you look at Bollinger Bands of, volatility, all of these things have always led to a big breakout. So you've kind of got every box ticked. I mean, everything. And, China have started to do the whole global stimulus game, and that will spread to everybody. Yes, at the end of the quarter, the Fed saw a draw of liquidity because of the bank funding stuff, but that goes away. So I don't know.
The only thing
for me, it's just a matter of time. It's really interesting when you see the list of the biggest holders of the ETFs. Yeah, there's some RAA firms and whatever. Most of it is the converter ARB guys.
Yeah,
it's all of them are the ARB guys. So they're either ARBing using the ETF because they can get prime broking on it, which you can't get on Bitcoin very easily. So they use it for prime broking, and then they're ARBing the futures or the perps.
Right.
Yeah.
There's no actual real new money that's come in yet then.
Yeah, there is some. You can go down the list, but when you look at it, it's all Millennium, it's all the same players, and they're just extracting cash from the cash and carry.
But then the guys that we were all thinking were going to come in and allocate into the space who haven't already, does that mean they're still to come then?
Yeah.
Right.
Yeah. I mean, it's just, again, the regulatory issues. I mean, every week there's somebody else being prosecuted. Then you've got the kind of Trump on one side, the Harris administration not making it clear what they're going to do, and the SEC being hostile. So that keeps people back from actually really allocating. It's like, okay, we need election clarity.
Raoul Pal invests in cryptocurrencies in a strategic and forward-looking way, focusing on assets that have the ability to do better than expected. He also knows that Ethereum has strengths, especially because he is involved in high-end NFTs. He recommends a more risk-averse approach to investing, saying that Ethereum might not do as well as platforms like Solana this cycle, but it might still do better than Bitcoin because of its strong security and changing development roadmap. He also talks about new trends in the crypto space, like how gaming sites on the Avalanche blockchain could help spread the use of cryptocurrencies. Besides common causes, Pal also talks about less common ones, such as the role of meme coins as possible market drivers in the future. Let's watch more clips from the interview to learn more about what our Pal talked about.
Another thing, I was speaking to another mate of mine who runs a big macro book for one of the big macro funds, and he was like, same thing. He's like, there's no vol priced in for a Trump win, let's say, which is very positive for tech and crypto. And he said the other thing that's not priced in is a contended election. It's if the liquidity picture doesn't match what we're all expecting. You know, the general thesis that I brought about was the fact that we need to refi the debts, and that liquidity has been cyclical and it's been measurable, and we've got a huge amount of debt coming. Yes, GDP growth is decent right now, so that does pay for a lot of those interest payments, but interest payments are very high. So for some reason, not only the US doesn't provide liquidity, because if you go back to the 16-17 bull run, the US had raised rates once, went on pause, didn't do anything with liquidity. The Chinese did it all, and then the UK because of Brexit. And so it'd have to be all of them not doing anything. But the Chinese have already made it clear they're going to have to do something. So that's the difficulty I see is I don't see how nobody's going to do it. Because inflation's imploding in Europe right now. It's just the Europeans are going to keep going. So, yeah, I don't know. That's the only thing I can see is for some reason that whole liquidity story, the cyclicality, doesn't work. But it's been working perfectly since the bottom in 2022. And really, when I look at the patterns and stuff with GMI, it's like I'm complaining because it didn't match last week versus, you know, really with a bit of wiggling around because of flows or whatever, whether it breaks out this week or in 2 weeks' time, 3 weeks' time, makes no difference. But it should be that order of magnitude in terms of time. It's like, it's right here, right now.
Time.
Everyone's looking for the confirmation of Bitcoin, and then everybody's going to get out the risk curve. I mean, because look, if we've got the banana zone,
everything's going to rip.
Everyone knows what the game is.
You want the beta.
Yeah, everybody's going to want the beta. And, you know,
so where do
we're
we get
already
the beta?
seeing it. You can barely keep memes underwater.
Well, memes are going,
and
but memes are going.
Stuff like SUI, you just can't keep these things down. So you can see that the market's kind of getting ready to do all this stuff. And the moment Bitcoin breaks 70,000, I mean, God, these memes are going to go bananas.
ETH's been a dog, though, right? Like, ETH has really suffered. I mean, Solana's looked better than ETH by a long way. Are you still, because you've historically been a fan of ETH, are you still a big fan of ETH?
I mean, look, I love ETH. It's great. My only ETH exposure is NFTs. So I've got a lot of high-end NFTs, which are only on ETH. Other than that, I'm a mercenary otherwise. It's like, you know, what's going to outperform? I've been Solana, and then I've been switching towards SUI, even though I'm on the foundation. So I've been granted tokens, but I've actually been buying in the open market because the chart versus every cross rate versus Bitcoin, Ethereum, Solana, and choose your token, and it's about performing. So I'm like, okay, this is the signal that this may be the next chosen one. ETH, I've been thinking through what happened with ETH. So the layer 2s obviously took away from the layer 1. Okay, fine. But what I'm thinking is really being built is something that scales much larger by having the layer 2s, and then they're going to go to this ZK roll-ups, whatever it's going to be. But they have a roadmap, and I think basically they've overbuilt infrastructure for where we are right now. And that's what it is. While Solana and SUI and other stuff are seeing the pickup in activity, ETH has basically built out enormous amount of block space. And as the market grows, I think, you know, ETH, because it's security and all of the other stuff, will attract more flows. But it's probably going to underperform this cycle. Underperforms Solana, but I still think it outperforms Bitcoin. I look at that cross a lot. That cross perfectly works with the ISM. So as the business cycle picks up, that's alt season. Now, why is that? It's pretty simple, because everyone has a bit more money. Because as soon as the ISM picks up, still below 40, below 50. So this is, it actually says a big part of the economy is still slow.
Bitcoin's recent drop below $60,000 has shook the crypto world, causing $150 million worth of long bets in digital assets to be liquidated. This is not the usual bullish trend. October has traditionally been a great month for Bitcoin, earning its nickname Oktoberfest. However, October was also a bad month for Bitcoin, losing $63.2 million. This is because of changes in liquidity cycles and macroeconomic forces, such as political unrest in the Middle East and a weaker-than-expected CPI report. The CC's lawsuit against the trading company Cumberland has also added a regulatory twist that is making investors less confident. The latest data on jobs in the U.S. made it less likely that the Federal Reserve would lower interest rates. This has tipped the scales even more in favor of traditional safe haven assets like gold, while riskier assets like Bitcoin have lost their appeal. Drawn to this change comes after bigger problems that have caused Bitcoin to drop 8% in the last 2 weeks.